Hello, and welcome to another webinar by Smartkarma. I'm Michael Tegos. Today, I'm excited to welcome back Insight provider Criss Wang for a deep dive into China's healthcare sector. We will look at investment opportunities, stocks to watch, and the general outlook of the sector for the year ahead. Criss is a China healthcare analyst with over 13 years of experience in both finance and healthcare, covering clinic operations, investment, and equity research, both in China and overseas. Criss, welcome back to the webinar. It's great to have you with us. Let's get right into it.
Okay, thank you, Michael. Hello, everyone. This is Criss from Smartkarma. Thanks for having me today. Now, let's start the presentation directly. First of all, let's take a look at what has happened to China healthcare sector since the second half of 2021. The new guidelines for clinical R&D of anti-tumor drugs based on clinical value was issued by the CDE in July last year, so as to regulate the increasing fierce competition and overdevelopment of innovative drugs in China. Meanwhile, the boundary of volume-based purchase and centralized procurement is gradually broken. For example, growth hormone, dental implant, IVD, chemiluminescence, and pacemakers that are originally considered difficult to be covered were actually included in the VBP, causing more concerns about the outlook of healthcare industry. Besides, more than one companies with licensing mode were rejected by the Shanghai Stock Exchange in the process of their IPO on SSE stock market. And we saw that IPOs began to fall on debut in Asia market. And this phenomenon is more common in Hong Kong Stock Exchange. Together with the plunge in CXO sector last December due to the potential overseas policy disturbance, we saw that the China healthcare sector begins to have its rational return since the second half of last year. Under this background, many investors began to be pessimistic because they have concerns that the scale of the products would shrink significantly and the company's profits would suffer greatly due to the VBP and the medical insurance negotiation. Meanwhile, investors are further worried about whether the mid and the long-term price system of healthcare products and service will be continuously suppressed, thus raising concerns about the logic of the company's valuation. Domestic policy changes have really affected the entire healthcare industry, but actually there have been other similar changes throughout the history, such as the reform that took place in China pharmaceutical industry in 2015. However, instead, we have witnessed the rise of China innovative drug industry since then, and the progress of NMPA and CDE in recent years is also well known. Actually, it was just because of the reform in 2015 that started the development of innovative drugs in China. The hardware and software infrastructure is much better now than it was 7 years ago, and the resources still continued to be poured in. It is true that some enterprises may be unable to survive in this new environment, but the conditions for the development of China's pharmaceutical industry as a whole are still clearly better than 2015. Reviewing the trajectory of the change of healthcare policy in the past decades, the industry is constantly optimized and adjusted under the guidance of the policy, and finally achieves a new balance. So confidence needs to be rebuilt rather than destroyed. There is no reason to dismiss the prospects of China's healthcare industry because of the correction in the short term. For example, the rally these days is very encouraging. In fact, the rational return of the healthcare sector is very good because it would squeeze the bubble in valuation and make the whole China healthcare industry to develop more healthily. Meanwhile, we are highly bullish on China healthcare industry in the long term. If seen from the big picture, the US per capita healthcare cost is over $10,000, and the proportion of healthcare spending in the US GDP is close to about 20% and would increase to about 30% by 2050. However, in China, the proportion of healthcare cost in total GDP is just about 6 to 7%. So how many times will China's GDP double by 2050? At that time, it won't be that difficult to have about 20% healthcare cost out of total China's GDP as well. There is significant growth potential in China healthcare. So it is suggested that investors should not pay too much attention to the short-term fluctuation in the market, but take a longer-term view. The future of China's healthcare industry is still worth looking forward to. Now, let's talk about the investment logic and opportunities in China healthcare industry. After continuous pullback, the valuation of China healthcare industry as a whole has fallen back to a much more comfortable range. We are very excited because investors would have the precious opportunity to pick up some really good assets at a good price. First of all, let's see the medical device sector. The scale of China's medical device market has already exceeded 600 billion RMB. It is expected that by 2023, China's medical device market size would be over 1 trillion RMB. Meanwhile, the medical device industry has strong training requirements and stickiness for doctors. If a company does well in a certain segment and has sustained investment and R&D progress in this field, doctors would constantly put forward suggestions for improvement to maintain the core competitiveness of the product, build the trust, and develop operational habits. Therefore, it would be relatively difficult for new companies to achieve corner overtaking. In terms of policy, in December 2021, the 14th five-year plan for the medical device industry was released, which is actually China's first state-level industrial development plan for the medical device sector. There are three important points that are worth mentioning. First, by 2025, the medical device industry foundation will be upgraded and the industrial chain will be modernized. Mainstream medical equipment will be effectively supplied, and the performance and quality of high-end medical equipment will be significantly improved. The overall capacity to support the public health and medical needs will be initially formed. Second, the development focus would be on the following key fields, including diagnostic and inspection instrument, monitoring and life support device, maternal and child health equipment, healthcare and rehabilitation equipment, and so on. Third, focusing on the international strength of Chinese brands and aiming to form the world's leading enterprises in innovation. On the other hand, for China's new infrastructure projects, considering the construction cycle and the current situation of China's medical and healthcare, it will be a long logic, at least 3 to 4 years or even longer, and the certainty is very high. Therefore, based on the above points, we recommend investors to follow Shenzhen Minzhui Biomedical Electronics. The ticker is 300760, which I had made detailed analysis in the Insight 2022 High Conviction China Healthcare. Secondly, let's see TCM, Traditional Chinese Medicine. The National Healthcare Security Administration and the State Administration of Traditional Chinese Medicine together issued the new guideline on medical insurance to support the inheritance, innovation, and development of TCM, indicating that the national policy are supporting TCM from top to bottom, and that various specific measures are being implemented. According to the guideline, it is expected that the medical insurance coverage of TCM products and TCM medical service would increase. Besides, TCM medical institutions do not implement the DRGS policy for the time being, which is obviously a very preferential policy. In this sector, Criss Wang Pharmaceutical, the ticker is 600436, is our top pick. because PNTZ Huang is the only double top secret variety in both formula and production process, which is its core competitiveness and determines its unique quality and position, indicating high moat. Since it belongs to the health product with strong consumption attributes, it will not be included in the VBP. Besides, the company has 11 new drug projects under development, including 3 innovative TCM drugs having entered the clinical trial stage so as to promote the modernization of TCM, which is exactly in line with the national policy. Thirdly, let's see biotech. For pharmaceutical companies, it is quite common to invest about 2 billion RMB in research and development annually, which means that if the financing environment becomes poor, it could be difficult for domestic biotech companies to maintain its investment scale for several years. Such environment favors companies that are strong in their own capability to generate cash flow, because they have the money to continue R&D while their competitors are falling behind. So we recommend investors to consider companies' cash balance, including cash plus short-term investments plus trading financial assets, so as to judge the company's short-term liquidity. For companies whose cash flow are not enough to support over 2 years, and there is also low possibility of explosive revenue growth in the future, it is reasonable to believe that such company is highly dependent on the need for new financing at the end of this year or early next year. If the market is in a rational return and the financing window period is becoming smaller, the refinancing ability of listed company would also likely be significantly limited at that time. So companies' survival risk is relatively high. Investors are advised to avoid these biotech companies. It is also worth mentioning that for big pharma, biopharma, and investors that have sufficient cash flow in hands, it could be a good timing to pick up some good assets at low price, either for expanding their current pipelines or getting prepared for longer term in advance. On the other hand, as pharmaceutical companies' market space and profits are limited by policies, the restriction of industry pricing power could not just be cyclical, but long-term. So domestic companies have to consider internationalization so as to hedge the domestic policy risk and open up new markets, which means that the biotech companies who could achieve breakthrough in the global markets would have significant growth potential in the future. After all, companies could only achieve the real reversal in valuation by delivering outstanding commercialization performance. And all the above are the logic that helps investors to choose good biotech companies. Fourthly, let's see CXO. The concerns on the CXO sector mainly include, first, the bonus period of domestic low-cost labor could have basically reached its peak, and the former cheap labor may be gone forever. Second, pharmaceutical companies' valuation growth base could be restrained due to the domestic policy impact, which leads to large price reduction on products and shrinking market size. Third, as the new IPO's listing would not be as easy as before, the refinancing ability could be limited, leading to the doubts on the sustainability of the growth in R&D investment and the corresponding results. On the other hand, domestic leading pharmaceutical companies have begun to establish their own clinical teams and try to completely get rid of CXO, which is mainly due to the high cost and also for the protection of IP or the establishment of core competitiveness. If it becomes a trend in the future, the result is that fewer companies would be willing to pay as much for CXO service as before, and the reflection arc of negative policy on pharmaceutical companies will have an impact on all CRO and CDMO sooner or later. However, at that stage, there could be two scenarios. First, for CXO company that could still keep close with the latest R&D trend, so as to make themselves capable of delivering products or service that pharmaceutical companies cannot do by themselves, and also have enough production capacity, labor, and techniques, etc., that could help them in the afterwards implementation, so as to truly make things happen at an attractive cost. These CXO companies would still survive and keep certain leading position in this industry, even when the CXO industry goes downwards, such as WuXi Bio and WuXi Biotech. These leading CXO companies' valuation would rebound again as policies become gradually friendly or new growth points with certainty emerge in the market. Second, for CXO companies with weak R&D system and innovation capability, they would have the real trouble in the long term. If you ask, when would the CXO and the biotech companies achieve a complete reversal in valuation? There could be a couple of signals. First, the policy impact is easy, such as the VBP bidding becomes friendly, the drug price have been reduced less, and the medical insurance reimbursement rate has been increased to offset the previous large price reduction, so as to support the rapid development of the industry. Second, there is some fundamental change in the payment system nationwide, such as introducing commercial insurance, etc. Third, pharmaceutical companies could make breakthrough in internationalization, indicating promising outlook in terms of commercialization. Then the industry would take off and companies will beat expectations with their strong performance. So their share price will hit new highs. Overall, for those good companies, the continuous pullback has priced in the uncertainties and the negative policy impact, and the valuation of China healthcare sector has entered a very attractive range. So for long-term players, it is recommended to consider to long some high-quality assets at a good cost. Thank you. Now I'm open for questions.
Thank you very much for this, Chris. We saw a rebound this past Monday. So I wonder if you could comment a bit on that and how it sort of shapes the further outlook.
Yeah, actually the rebound on Monday is very exciting, and it helps build sort of like confidence. So after the continuous pullback, it is not surprising to see some rebounds. And after rebounds of the industry ends, the market would probably begin to enter the differentiation stage. I mean, for those truly good companies, for example, with international talents, core R&D capabilities, or something like high quality products, pipelines, etc., they will eventually achieve a complete reversal in valuation or even hit new highs when they deliver outstanding performance in the future. However, for the companies that do not have the ability of seeking alpha, the valuation cannot be fixed in the future after the rally ends. So which means that these companies may just have a temporary rebound rather than a complete reversal. Last but not least, I think investors should also keep an eye on the external factors, such as anything change in the macro environment. It could also affect the final decision making.
Got it. Thank you very much. A question from the audience is, if you had to rank these 4 subsectors within China's healthcare in order of preference, how would you rank them today, following the sector correction and the rebound we talked about?
Well, okay. So for the 4 sectors, I think the first one I prefer is definitely med device. That's my first choice. Because, as I said, for med device companies, if you see their revenue structure, a lot of med device company has already overseas revenue. But for biotech companies or pharmaceutical companies, their revenue in the global markets are, very limited. And, for med device companies, they also can have some easier ways to go global, like applying for CE marks or 510K sort of things. But the FDA attitude towards the new drug approval has changed last week based on the Innovent's failure. So medical device is my topic. And secondly, I think I would pick CXO because, as I said, the reflection arc of CDMO and CRO is still a little bit longer than the biotech companies. So I think currently their fundamentals are still very strong and solid. So I think they are ranking in second place. And third place, I would prefer the biotech because if you check the Hong Kong Stock Exchange, there are a bunch of biotech companies' valuations very, very attractive. So it's a very precious opportunity to pick up some really good assets at very good price. So definitely, if you choose the right thing, you will have alpha. And the last one is TCM. Because in TCM, honestly, there are VBP on TCM sector. But PNTZ Huang is different because it has a kind of like health product with strong consumption attributes. But for other products, it's really difficult. They have to face the VBP. Yeah, that's my ranking.
Thank you very much for that. Another question from the audience is, what is your assessment of TCM counters such as Xinwei Pharma? Are we at bottom waiting for reversal? Asks the attendee.
I never did any research on this company, so I cannot answer you this question right now. But you can check if this company's products has been within the VBP scope. If they are, then probably you need to reconsider. And I'm very happy to reach out for further detailed discussion after I finish my detailed research.
Thank you very much for that. Another question is, if you had to pick a company for biotech or biopharma, which one would you say suits the qualities that you have defined the best, such as large liquidity balance, innovation focused, and internationalization?
Yeah, it's a good question, Michael. Well, honestly, I think it's too early to tell which pharmaceutical company would finally stand out and become successful in commercialization in this new environment. For example, Beijing is taking the lead in terms of internationalization, but other companies such as Innovent, Junshi, Remigan, etc., they all have opportunities to make breakthrough. So the market pattern has not determined yet, and the companies that I mentioned all above deserve to follow, I think.
Thank you for that. How's the COVID-19 situation developing in China in terms of, we've seen that China maintains its zero COVID policy. So what would be the continuing impact of that?
Honestly, I think thanks to China's active pandemic prevention procedures, the overall situation in China remains controllable. And recently, we have some small outbreaks in different regions, but the government's rapid response has contained the potential for widespread transmission of COVID. So you know that last December, the NMPA of China has granted approval for BRICS neutralizing antibody therapy, which retains activity against Omicron and Delta. So obviously, and we also have got the Pfizer's COVID pill got emergency approval last week. So the launch of these therapies means that COVID is now treatable in China, which will greatly reduce the public panic. And so, based on this situation, China has the confidence and ability to implement the zero COVID policy so as to ensure the safety of its people, which is very essential for China's long-term development. So honestly, within China, I can tell that Chinese people are fully support the COVID zero policy.
Got it. Thank you for that. And thank you everyone for attending today and for sharing your questions. If you want to go into further detail on any specific companies or anything else that you have heard in this presentation today, please reach out to your Smartkarma account manager and they can help you connect to Criss. You can also follow Criss's profile on Smartkarma so that you don't miss any of her insights, and you can actually see some of her more detailed reports on some of the topics that she talked about here today. And if you have any other questions or comments, you can always email us at research@smartkarma.com. Criss, thank you very much for being with us today and for being so generous with your time.
Oh, thank you, Michael.